My name is Stephen Goakes and I'm the Managing Director of Natgen. I'm here to talk to you today about our Natgen Development Trust UN25, which is office warehouse park located on the southern side of Brisbane in a suburb called Slacks Creek. Now, Slacks Creek is a well-known suburb for people from Brisbane because it has the M1 motorway from Brisbane to the Gold Coast running straight through it, and it's an area where you would go to buy a new car or notably go to IKEA. It's one of the spots where IKEA has chosen to have one of its national stores. Also, it's a sort of small industrial sort of area, so you'll find small light industry type uses. But also further up in Slacks Creek you find a lot of car sort of things like panel beaters and people who sell car accessories, that sort of thing. So it's a very well established area which was first subdivided in the early 1970s, and on that basis it's been a mainstay of industrial Brisbane for quite a long time. This site that we've got, which is on Westaway Street and Rowland Street in Slacks Creek, is an infill site which has basically been used as a storage yard for the last 50 years, I guess. So it's an opportunity that doesn't come along very often in a very mature area to actually infill into something which is going to be, frankly, a lot nicer than what's surrounding it due to the fact that it's a lot younger. The design of the centre will be a very typical Natgen office warehouse unit complex, which will be developed and sold as strata office warehouse units. And basically, in the current plan, there's 10 units in the complex, but as with most of the Natgen developments, once we get into it and we actually go through the value engineering process and actually looking at the best way to improve the return, we often change the design, sometimes slightly, sometimes quite radically, and in every case we've been able to increase the returns by doing that. So it's a design process and a value engineering process. We use our group of consultants, which we've used for many developments now, and we're a pretty tight group now, so we feel like we can get the best out of sites and out of the unique features that most sites have. This one, for example, if you see it in the briefing paper, etc., you'll see it's a triangular shaped site with 2 street frontage. We love 2 street frontage because it means that we can actually take vehicles, and particularly trucks, through from one street to the other, and we don't have to turn them around on site. Turning a truck around on site really robs space from a development, so we get a higher level of GFA in ratio to the whole site. GFA means gross floor area. The places which Natgen chooses to put our developments is very specifically decided based on aspects such as infrastructure in the surrounding area, where population is growing, where we feel that we've not only got a mature but also a growing market. We also look at the economic activity in that sort of sphere, and also where we're going to be able to demonstrate long-term value and growth. So, for example, in Slacks Creek, which is, as I said, in the southern suburbs of Brisbane along the M1 corridor, we've got the ability to leverage off, like everything, the Olympic Games in 2032, which will have a lot of activity between Brisbane and the Gold Coast in particular. So tick, we've got the right location with the infrastructure and growth aspects. It's a very particular market that we serve with these units, which are somewhere between 100 and 200 square metres, tilt slab, industrial, warehouse, office type units. And our typical buyer is either investors or owner-occupiers. Because of the price point, which is between about $500,000 and $1 million for these things, they're a very good size for people's super funds. So we get a lot of people who buy their strata unit in their super fund and then they run their small business out of it, which is one of the few exceptions in the tax law to allow people to own an asset in super and still use it basically for their own business. As we've worked through our various developments, we've really honed our designs. So things like really good standard of bathrooms and kitchens is something that in industrial units before we started was really not taken much account of. Now we get people who've been buying our developments in Coomera and Ormo, etc., looking at the standard of what we're producing and thinking, actually this is really livable. People will like to come to work here, and the modern facilities give a modern feel to these things, what are essentially an industrial asset. Again, we also make sure we've got plenty of light. That's another thing that we've learned over time, is that the more windows you can put, even in an industrial complex, the better it is. The previous Natgen development trusts of a similar vein, the office warehouse style, have included our UC19 trust, which was completed in 2020 and provided above forecast returns. The second one was CM23, which has just actually recently this week we've got the titles to, and the sales of the actual strata units are happening within the next couple of weeks. That trust has outperformed IM forecast by a substantial amount. The next cab off the rank is our OR23 office warehouse project in Ormeau in the Brisbane Gold Coast corridor. It will be completed in about a month or 6 weeks' time, and that will also outperform the IM forecasts substantially. And then the next one to finish by the end of the year will be our YB24 development trust in Yarrabilba, which is again in that growth corridor between Brisbane, Logan and the Gold Coast. And it's a bit earlier on. We've just put up the walls, the roof is going on, so it'll be a little bit further down the track, but when it comes along it'll be pretty good too, and it's looking like it will outperform its forecast substantially as well. So as you can see, the second half of 2024 is a very busy time for us of delivery of developments. Beyond that even, we're also delivering nearly $70 million worth of self-storage developments in that same period as well, including our UC22 trust at Upper Coomera, which is a 10,000 square metre GFA major self-storage facility. Following that one, we've got our ML23 development trust, which is at Mollendina, again in the centre of the Gold Coast, which is also a large-scale self-storage facility, about 8,500 square metres gross floor area, which will provide about 600 units for that part of the coast. So as you can see, we're busy developing things. In every case, we've outperformed our information memorandum forecasts, and that's because we're pretty conservative about what we're offering within the information memorandum. So that comes about through a number of factors. First of all, conservative assumptions, and particularly cost control. We're very clear on cost control. You have to be sure that basically you've allowed for the appropriate cost escalations, but you've also provided realistic prices up front. We also have a level of control over our costs because of our relationships with our builders and our construction partners, and that makes a big difference as well. We also have a small group of trusted debt providers who understand the way we do things and provide us with excellent terms on the basis that they understand that ours is probably not your standard development organisation, because we do have a financial services licence. We've got a great deal of compliance with our organisation. We're financially secure. We've got great backing from our investors, and that provides a pretty low risk situation for those debt funders, so that we keep them happy, of course. Natgen Development Trust UN25 is, as the name suggests, a development trust. That's different in nature from a Natgen investment trust, which typically would purchase an existing asset and then manage it and run it through a life cycle of a 5 to 6 year term. A development trust like UN25 is in fact a much shorter investment. It's expected to be a 24-month, 2-year investment. And that one, we purchase the site, we gather the investors, we go through that process I spoke of before in terms of design optimization and value engineering. We build it, we go through a sales process of the strata units within the complex, we sell them when the building's finished, and then we distribute the profits and the capital back to unit holders. So all that happens within a relatively confined period. And that's one of the major differences. There's no income on the way through as there would be in an investment trust where we pay a monthly predetermined income level distribution to unit holders. So with the development trust, all the profit is at the end. Other than that, they both have the same level of oversight. They're all conducted within the framework of our Australian Financial Services licence. All our trusts, whether they be development trusts or investment trusts, are audited annually and under the auspices of the corporations law with everything we do. At all stages of our development process for a Natgen development trust, we seek to de-risk the process. And that's through everything from site selection to ensure that we have sites that have appropriate zoning parameters for what we're seeking to do. In the case of UN25, that means that the zoning actually allows for the permitted use of what we're actually doing here. There are a number of council applications that are required for various codes, like plumbing and structural codes and this sort of thing, but the actual use is effectively an as-of-right use on the site, so that de-risks the town planning process. Beyond that, we also, because of our funding structure and the fact that we keep our debt levels fairly low, we de-risk funding table. We make sure we've got adequate equity within the fund, and we also make sure that our debt is required over a relatively compressed time. So actually we're not very sensitive to the interest rate that we pay on construction debt because it's not out for very long. So we look for providers that can provide us with flexible terms and understand our way of doing things rather than looking for the very, very lowest rate. Within our investment trust, we're always looking for the very lowest interest rates, but that's kind of different for the developments. Obviously we want the lowest interest rate possible, but we balance that with the terms and the flexibility. Then we start our strata off the plan sales basically as soon as we start construction. With industrial, you'll find that most of the pre-sales happen once the walls and the roof has gone on and people can see when it's going to be finished, what it's going to look like. Also, it's only really at that stage when you can tell people when it's going to be finished, and with off the plan sales, people would prefer to know when they're going to be able to occupy their unit as well.